rise there. It may have opened before, but not something you're going to see regularly. And I was a little worried.
Sorry, folks. I'm just getting my fish update for the fish show last night. See what the set was like. It looks like they played a terrapin at the end of the as part of the encore. That being Terrapin Station by the Grateful Dead, which is pretty cool. Anyways, I'll get back to that. Do check out FZappa20 for fish updates. It's pretty cool. Just one more thing in the music business before we get to the VIX. I was watching this thing about the guy who actually composed Human Nature by Michael Jackson. It's been over 10 years since Michael Jackson passed away, and I'm certainly a fan, but I also certainly believe that documentary that was on before. I think that is definitely true. Anyway, Human Nature was made by this guy, Steve Porcaro from Toto, and he wrote the song. The actual real meaning behind Human Nature is his daughter was in a sandbox, and and some other little kid came over and hit her, and the guy was trying to explain to his daughter that the boy who hit her in the sandbox might have liked her, and that's just kind of the way human nature is. And the little girl was like, why, Daddy? Why would he hit me if he liked me? And they're like, well, that's human nature. So there you have it, the origins of the song Human Nature. All right, so let's get to the VIX. And, it's been just the last couple months with the VIX, this stuff has moved straight down, and the spikes have acted exactly the way you could predict they would act. This spike we had this week was only like a couple day spike, and it worked out just perfectly for people shorting it. At this point, what's up, Mateo Trade? Thanks for coming on. At this point, you could short the VIX at the top, at the bottom, in the middle. It doesn't really matter because the stuff is decaying like crazy, and anything kind of works, it seems like. Long people who, kind of saw the writing on the wall, you could see like, I'm going to sort of contradict myself here for a second, but you could see like VVIX starting to pump a couple days ago, and stuff started to turn around, and all of a sudden we got that spike. People that jumped on board for the spike made some money on the way up. A guy was just talking to me on StockTwits, or sending me a message on StockTwits a few minutes ago saying, do you think it's a legitimate strategy to get long some VIX proxy by maybe buying VXX out of the money calls or UVXY calls when you feel like there's going to be a spike? And the guy qualified that by saying, I wouldn't stay on this position for days at a time, but, for a 24-hour shot, jump on some calls, see what happens. And yeah, I'm a total fan of that. The big caveat is, of course, you don't want to hang on to a long position in TVIX or VXX or any of these for more than 48 hours. If it doesn't work, get out, because it's going to hurt. And it's going to start hurting more and more, and it might never come back. But the position that I've had on, which is in these set puts, it lost money on the spike, and now all that money has pretty much flowed back into the account. So, and we're actually not to the point where we were pre-spike. The all-time low in VXX was 1610. We're still at 1686. So when I say, all right, this is like operating awesome and this is perfect and it's easy to short this, you might say to yourself, well, wait a sec, Dave. I started watching you 3 weeks ago, and since then VXX has gone from 1610 all the way up, and now it's only down to 1680. Nothing's really going on here. It hasn't moved that much lower, and it's actually slightly higher than it was before. But the reality of the situation here is that we are dealing with a longer-term situation than just a week or two. We're dealing with this stuff decaying, and day to day, minute to minute, it's not going to look before your eyes like it's decaying. However, with contango over 10%, solidly over 10%, and staying that way, 10% represents per month decay in these things. So if you do 10 times 12, it makes it seem like it's going to go to zero. Now, fractionally as you move lower, it's not going to go to zero, but it's going to decay very rapidly when contango is 10% and more over time. And we're still in the middle of the expiration cycle here, so it's not like that contango number is just the last day before expiration and it's just this anomaly of being high. No, this is like real decay here. And, we've seen the markets just really rally back from the spike. And, it's always hard to say what moves the markets, but if you were to look back now with just a little bit more clarity than having it right happen in your face, you could possibly explain the spike as being due to politics to do with China and the EU. And you could say, well, the president came out and said that we might not get any sort of trade deal with China until after the election, and you could point to that event as moving the markets lower. Then, he kind of walked back those comments when he was at the NATO conference in London. And B, we had some positive economic data. We saw the unemployment claims was lower than expected yesterday, and just generally it's just kind of really rallied back. And you get days like today. Today, SPX up 30. That's a big move. And, I jumped on the T-triple-Qs on the initial spike, paying $71.80 or $71.90 for them. And I ended up selling them yesterday, $74 or something. And, I could have gotten more of that move, certainly. We're up to 77 in the triple Qs now. But, we can't always get every move. And I'm just happy I was kind of on the right side of things. Some of those little stocks that I've been playing, ACB and MNK, I just bailed out of a couple days ago. I don't want to expose my savings to the whims of these really small companies. I don't think. It can be fun to play them, and you see these issues that came way down from being really high up, and you think, wow, if they bounce back to where they were, then that would be a great return. But the reality is there's a reason for why these things have tank like they have, and it's not necessarily the case that they're going to go back to where they were anytime soon, if at all. Certainly people have been tweeting about the MJ industry. If we take a look at YOLO, somebody was showing a weekly chart. Let me get out of the way here. Somebody was showing a weekly YOLO chart, and it don't look good, to say the least. So this has only been in existence for I believe less than a year. But if we change the time frame to weekly, you see that this thing has just really tanked. One guy had it tighter like that, and it looked, obviously you can change the axes of your charts to make them look differently, but just really an ugly situation here in these MJs. And a lot of people bought it here and said, oh, it's going to definitely turn around, and then boom, and then they bought it here, oh, it's definitely going to turn around, and then they bought it here, and it looks like it's turning around, and then whack. So when does the whackage end? I'm not sure. We can go to MJ also, which is a similar shape here. And, yes, at some point this stuff's going to turn around, and it's becoming more and more of a bargain. This might be something that you're interested in, buying a little, being resigned to the fact that it's probably going to move lower against you before it turns around, but hanging out. The sort of worst case scenario would be you buy this stuff looking for a turnaround, and in the meantime, the recession finally catches up with us and this stuff never turns around and half the companies go broke. But you're not going to get a reward unless you take a risk, of course, and this risk hasn't worked out. Back to the VIX, shorting the VIX has worked out. Now, let's take a look in more detail at the spike action of the last couple days. And here you can see the spike here. It's like basically a 2-day spike. And if you laid into it the first day, then you would have broken even right now after being patient. If you laid it into the second day, you would have made some really decent money. Now, the thing is like you start to scale into a position on the second day, and if the market had continued lower, people would have said, and the spikes higher, people would have been like, oh, you're such an idiot. You should have laid into that. Obviously, the market was going to crash, but so it's hard. It's very easy in 2020 hindsight to say, oh, you should have laid it into it here. But when stuff is going on and everybody seems to be kind of panicking and they're like, oh, here it comes. The recession's finally here. It can be harder to pull the trigger. Certainly, things didn't look good this first day, and I wouldn't have felt comfortable pulling the trigger on that first day. Second day, stuff started to fade, and just to recap my video from then, I was saying, oh, geez, I'm frustrated. I don't have the bullets to take advantage of the situation here because I already have all my puts. I did actually add a little money to the account yesterday to, if we get another sort of pop here, to take a little bit of advantage. So let's go over to the position for a second. I wanted to talk about the position, and I was kind of considering doing something here today. So my whole position right now is the September 8 puts. Now, you can do some easy math to see the September 8 puts are over 50% lower than where we are right now. We're at 1684. That's the 8 puts. Can this thing go down 50% in 287 days is over 9 months. So it's between 3/4 of a year and a year. Can this go down 50% in that time? It can. It sounds like a big move. But, if we can just stay over 10% contango for like 2-3 months, then it can easily get there. The problem is staying at this contango level we have now. It doesn't seem realistic that we'll stay at this level. It's great to dream that we could stay over 10%, but it seems more realistic to think that contango could average maybe 6% this year if we're lucky with it. I don't anticipate us staying at these really dramatic levels right now. If we pull up VIX Central, we can see that it's showing contango of 12.91% right now. And once again, that's a pretty extraordinary level. I don't think we can hope for it to stay like that forever. But while it does, this stuff is really decaying rapidly. So my thought was, now that the money came back that flowed out of the account, that I would roll some of my 8s, the 8 puts that I'm long, up to 9 puts. Problem is that for me to roll up here, I'm only going to get half as many 9 puts as I have 8 puts. So you're kind of cutting your potential in half just to roll up $1 in strike. And when you're dealing in out of the money puts here that are like dollar cheap like this, that's often the case where like to move up a strike, you've got to sacrifice a lot of potential to the downside. So I came to the conclusion that I would rather hang out in the anticipation that this does move lower. If this moves a couple bucks lower, let's say in a month's time, I'll still have over 8 months left, and then I could take a profit on some of these 8 puts, use the profits to roll some of them up maybe. But now when I would actually, these are actually still at a small loss from my average price. My average price is just over 27 cents for each put. The market right now is 25.28. So to roll them now, I would be actually taking it's not that I'm locking in a loss, but I'm dealing with a losing position. And the transaction cost, although relatively small, although not that much, the transaction cost, it's still to roll 150 times, to roll 50 by 100, it's still over $100 in transaction costs. And this isn't a very big account. I was watching a video yesterday talking about how like if you have a smaller account, then the transaction cost as a percentage of your account is actually a big consideration. So you want to be, the smaller an account you have, the more careful you want to be about churning it, making a lot of trades. And when I look at my transaction costs over the last year, I've spent about $10,000 in commissions. And, this is a small account. That's 100% of this account spent in commissions. And that's a huge, huge amount of money. And, I've done a lot of trades here as examples for viewers and whatnot that I probably wouldn't have done if this was just strictly to make money on the position. However, that is a huge amount of commissions as a percentage. Hi, Greg. And so we really want to be careful with a smaller account. Now, a 10,000 or 100,000 account might not sound small to you, but even $100,000 account, 10,000 in commissions, and commissions is less of a big deal now because a lot of these brokerages have moved away from charging commissions on stock trades. But if you're trading options as a large percentage of your account, it's still going to be a big deal. And $10,000 in a year, even with a $100,000 account, that's another 10% that you've got to overcome before you're profitable. So all these considerations have made me not want to trade as much, want to really be careful about the positions I craft and let stuff ride. Being a day trader has gotten a lot easier with commissions being reduced. This move by the brokerages to reduce their commissions is huge for retail traders. Now, we've known for a long time that the brokerages have been getting payment for order flow, and so they had the ability to still be profitable while reducing commissions to zero, and so this move by them is a great thing. However, for options traders, commissions, although reduced, are still a lot. It doesn't seem like a lot. I know when you've got an option that's like, let's say an option is $2.50 in premium, to think that, less than 1 penny of that $2.50 is your commissions, it doesn't seem like a lot. However, when you take your account and you look at commissions, you can do it very easily on Thinkorswim. Take your account and look at your commissions per year. If you just go to the monitor section and click account statement, it's going to show your overall commissions per year. And your P&L. And so be very cognizant of the fact that over time, this commissions is going to kill you. It's the same thing we talk about. I know I harp on this all the time, but people like to buy these scratch tickets. And, when we're on the YouTube and we're talking about investment and 401k and portfolios and all this stuff, we tend to ignore the fact that most of the world and most of America believes that the way to financial success, the only possible way to financial success is to buy scratch tickets. And people will spend $5, $10, $2 a day on scratch tickets and not think about it at all. It doesn't seem like that much when you're there in the store. You're like, okay, I'm going to buy gas and a $10 scratch ticket. It's just $10. But we gotta stop thinking like the guy in the street and start thinking like the Bill Gateses of the world, the people who are visionary. The people who are visionary are people who their actions today reflect their plan moving out, not what's going to happen next week, not what's going to happen next year, but how do you want to structure your life to think ahead of the results you want 5 years from now. And the results you want 5 years from now, you know that spending $10 a day on a scratch ticket, if you multiply that by 365 days, or even 5 days a week, whatever, multiply it by 100 days a year times 5 years, and you've got a significant amount of money. It's the same thing with commissions. We want to start looking out farther in time, and thus, that's where taking advantage of contango, 10% per month contango is decaying very rapidly when you think of things in the long time. You want to try to focus your life and have stuff make sense for you financially over the long term. And I'm not going to get into like budgeting and all that kind of stuff, but this stuff isn't so far away from trading and all that. You can come up with this like brilliant trading strategy, but if you're not saving money every month to build your account, that doesn't really matter how brilliant your investment strategies are, because you don't have the money coming in to invest it. So people kind of do stuff backwards, it seems to me. You might be sitting here online and learning about how to invest or how to trade stocks or how to analyze charts and whatnot before you actually have your house in order. And by your house in order, I mean get the best job you can get for your level of education. Consider building up your education to get a better job. Now, this is all like Warren Buffett stuff. I didn't make it up. Living below your means. You want to create an engine that's producing money to save, to invest, to build on. That should be your priority, is getting yourself in a situation where you can be adding savings and building up your stack of cash in life. Because that's our ultimate goal, is to be financially independent by having a stack of cash. And yes, learning how to trade is part of the equation, but you can't even. You're never going to get there unless you can learn to live below your means. And I know that people are going to say, well, that's obvious. Of course, of course. But statistically, in America, many, many, many people are living check to check, and many, many people are spending all their money on scratch tickets. And, when you look at those stats, you got to think that some people that were watching me now have not mastered these things and are not following these principles and are, and so back it up, back it up. The other thing that I find with a lot of people is maybe you're like, oh, I want to trade. This is great. I'm going to trade. And meanwhile, you've got these credit card bills that are in the back of your mind that you haven't paid off, that are like, if you have a 20% credit card bill, synthetically, you're making 20% by paying that off. So, forget trying to chase returns in the market. Like, wow, if I do this, I could make 20%. That would be really awesome, blah, blah, blah. You can guaranteed make 20% by paying that credit card bill off. It doesn't sound as fun. It's certainly not fun at all. How exciting is that? Well, yeah, I worked this week. I saved my money. I denied myself going out. I denied, having fun, getting extra food and whatnot. I sat home and I ate hot dogs. To do what? To pay off some stupid credit card bill that I still owe like $5,000 for, and it's going to take forever to pay that off. I'd much rather put some more money in my Thinkorswim account and buy some options and maybe hit it big. But, that's a backwards way of thinking of things, because get your house in order first. Once your debt is taken care of, then come back and we can talk about some creative ways to use the money that you're stacking. I mean, and even when it comes to creative ways to use the money you're stacking and all this trading stuff, most people don't beat the S&P 500. So for a lot of people, and I'm taking customers away from myself right now, I realize, but for a lot of people, the best thing they're going to be able to do investing-wise is to put money in like an index fund, a passive investment, the SPY, buy the SPY and leave it. That's going to be the best deal. That's going to make more money for most people statistically than any of this trading stuff. And I know it sounds boring, and there's a lot of people out there not advocating a buy and hold strategy. They're saying that that's old news. That's people don't do that anymore. But for me, empirically, from watching my family, watching my parents, my grandparents, they've made a fortune with buy and hold strategies, and most fund managers don't beat the major indices every year, and most traders don't beat the major indices every year. And the reason they don't is they're not disciplined, et cetera, et cetera. And yeah, you can try to beat the odds, but that's kind of the hard way. The easy way is just buying the SPY and putting it in there and leaving there, buying USMV and putting it in there and leaving there. And I know it's very hard to leave that stuff in there when the market goes lower, and you try to time it. You're like, oh, well, they say there's going to be a recession, so why don't I put my money in cash, take it out, and I'll put it in when we crash. But then like a week later, you're like, oh, I saw this new trading strategy. Let me try this, blah, blah, blah. So get your house in order. Get your credit card bills paid. Learn to live below your means. Educate yourself. Go back to school and get an education so you can get a higher paying job so that you can bring more money in. You know, I love that people like watching my videos and learning about the VIX and trading, but it's not necessarily your way to financial independence. There might be other things that you can do first that are more important and that are going to have better results for you. Okay, so now that everyone's left my channel, anyways, I just wanted to get that off my chest because it's very frustrating to me seeing people who are getting killed on these credit cards and don't take care of them. A, buying scratch tickets. B, and C, if trading with a small account and thinking you're going to become a full-time trader based on that, when you could be working a job that pays a decent hourly instead with your time for now while you stack cash, and you could be trading on the side while you're stacking cash. That's going to make more sense for most people. So don't get caught up too much in like the bubble of this trading world and trading videos and all this stuff. And being near to people that have a lot of money and make a lot of money is not going to make you money by osmosis. And it's like a Zen thing, like knowing your spot in the world and accepting it to some extent. All right, so we're on track with the stuff. Contango is building still. It looks like the market is just rallying again. We're back to the rally, and so for till further notice, we're back to slow rally mode for the market. So that's where I see things right now. I'm not going to go real extended today because I don't have a whole lot to say, but I appreciate you folks tuning in. I'm going to come on and do some more specific VIX strategies for shorting volatility and explain stuff on a more basic level, probably tomorrow, and do a weekend thing on that, some basic strategies for trading UVXY and VXX. But in the meantime, have a great weekend, folks. Do check out Greg's stuff. It's awesome. It's very different from what I'm talking about, and it's going to be really interesting to you. And I'll see you in the next one. Thanks for watching.